Welcome to the Krinzman Property Playbook, where we dive deep into the heart of South Florida's real estate scene. I'm your host, Matthew Krinzman, here to guide you through the strategies, insights, and community connections that make buying and selling real estate a science. If you're looking to move beyond the basics, build trusted relationships, and grow your understanding of this competitive market, you're in the right place. Every episode, I'll be bringing on local pros, from attorneys to contractors, to give you the inside scoop on what it really takes to succeed in real estate. So whether you're an investor, buyer, or just curious about the market, let's kick things off and get you one step closer to your real estate goals. Welcome to the Playbook. So welcome to the podcast, Adam. So my name is Matthew Krinzman. I'm the host of the Krinzman Property Playbook. And today we have a good friend of mine, Adam Spiegel, independent insurance broker in South Florida. And today Adam is on with me and with us to talk about the property insurance market in Florida, in South Florida in particular, and really to help, educate us and the consumers out there how to navigate the crazy property insurance market that we have here in South Florida, and how Adam is best positioned to help in getting a good or the best possible insurance there is for the owners out there of property, either be it residential or commercial. Although I know you pretty much zone in on the residential side now, right?
Correct.
The insurance market. So Adam, tell us a little bit about yourself. Just give us 2-3 minute overview of Adam Spiegel, who you are, and how you got into the property insurance business.
Absolutely. Well, first of all, Matthew, thank you for having me here today. Looking forward to educating the listeners in this difficult market that we're in.
Yeah.
Getting back to me. So born and raised up in Connecticut, came down to fulfill my college career in Florida, ended up at FAU in Boca Raton.
Right.
And did my 4-year in Boca, and then I never left South Florida.
Right.
Ended up getting married, actually married into the industry, ironically.
Yeah.
My wife's father owned an insurance agency on Miami Beach, and I didn't quite take the position at first after meeting her and my future at the time father-in-law. Did a few things, got my feet wet with different jobs and careers and what have you. And it kept playing in my head about this whole residual commission thing where you don't have to work every day and start over, sell something and then move on to the next and sell something else, and just constantly doing the grind and hustling. Right. Insurance is a residual business where you get a client and you basically earn their trust. You become their trusted agent.
Absolutely.
And if you do the right thing, they will stick with you for a long, long time. And
that's very true.
You can round out some accounts. You can go for the health insurance. You can do their auto insurance. There's a lot of other insurances other than property insurance,
right,
which I specialize on. And insurance is residual. Every time you do renew, there is a commission.
Well, not only that, but it's not so much the commission. It's about you have really, like you said, in your particular business, you almost end up with the customer or the person who the insurance policy holder for life, essentially, because rarely do they change, right? They don't change brokers or agencies very often. They usually, you're their guy, you're their person for the next however long they own property or buy property in Florida. And so that's what helps is also being able to service those policy holders in the right way too. I think giving them excellent customer service and also being there to explain what they have, right, and what they're getting is a key component, I think.
Yeah,
in your
being
business.
The trusted agent.
Yes.
There's a million of us, essentially. It's like real estate agents.
Absolutely.
Brokers.
Yeah.
What differentiates, or you hope to be a differentiation between you and the next guy, is the service. Being available, picking up the phone, being knowledgeable, explaining, not just collecting that renewal commission,
Sure,
actually working for it. And unfortunately, in our industry, that is a great way to differentiate yourself from the next insurance broker or insurance agent, is to just the service.
100%.
And
100%.
it's all about the service.
Yeah.
Now, I do want to be transparent. Not every agency or every agent has access to every single market. So
That's a good point you're bringing up. That's a very good point. Yeah.
So with that being said, I would love to have every single market available at my fingertips to offer to every one of my clients. It's just not the case. So I built a certain way of doing business where I'm just super transparent. I don't just sell, I'll educate. So I will, if somebody has a quote that they received, I won't speak for that quote, but I will, because if I don't represent that carrier, I can't really speak for it. Right. But I will be very honest and candid with my clients that it could be a viable option. And yes, I have lost some business to a market that I just didn't have access to. But lo and behold, they might not be renewed in a year or two. And guess who's calling me to come back to see at least what I can offer from that point forward.
Again, that's how you differentiate yourself from the other agents and agencies in the state or locally, and that says a lot. I think about the
people see through it. People see through it. People 100%. See through.
And we'll talk about that later, because we have some stories like that, which I think people like to know and hear, where you and we've worked together on deals, on insurance policies, and we've had those situations where the buyers are, getting a new policy, and you've been 100% transparent every time I've ever sent, referred a mm-hmm. buyer or a client to you, and I've always gotten good feedback from my clients because of that, and that's a very important thing. So let's get into the insurance market for Florida. I guess really we want to talk about South Florida, because I think South Florida is kind of unique, although all Florida has insurance issues, I guess we want to call it now, but there's always a way to find the right policy. So, I don't know, you want to talk about the current state of the market, the insurance market first? Do you want to get into that? Let's get into that.
Yeah, we can do that. We'll set the tone.
Okay.
So right now, we'll call South Florida. We're going to focus on South Florida, which is basically Dade County, Broward, Palm Beach, even up to St. Lucie County. Citizens is a government entity that sells insurance. They're not for profit. They always have been known as the company of last resort. But what's happened over the course of, I'm not sure exactly how long, but it's been too long. Yeah. Their rates have been too competitive to the private market. As a matter of fact, it's been better than the private market. So over the course of the years, agencies, consumers have all flocked to Citizens, and they became overpopulated. Mm-hmm. Their exposure that they have is not in a good place, where if there's a major catastrophe in the state of Florida, specifically to South Florida, they won't have enough money to pay their claims, and they know it. It's not good for anybody, even if you're not with Citizens. If you're with a private company, that's not a good thing, because you will be assessed in other policies that you have, whether it's with your private carrier, if you have a boat, it's with the boat insurance policy, it's with your auto insurance policy. You'll feel it on all those policies as well. So it's in the best interest of everybody that is a homeowner in the state of Florida is to get this Citizens under control. And Citizens has been doing that. They've been depopulating like crazy.
I've been depopulated
to my understanding,
yeah,
right. It's to my understanding that they are now finally just under 1 million policyholders just this month, and with the intention
unloaded 1 million policyholders.
I don't know how many they unloaded, but they are currently under 1 million total policyholders in force at the moment.
Really?
Just under 1 million, like 987,000 or 988,000 currently, with the goal of just about 900,000 by the end of this year, which is a good thing.
Yes.
Now, the legislation has been pushing all these reforms over the course of the few years, and it's really has been working. And these reforms are really to get these private carriers into Florida. The more business or the more markets that we have will create competition and ultimately reduce rates.
Right.
And although we've had 3 major hurricanes in the course of 2024, things are proceeding as planned, and carriers are still coming into Florida. So the state of the market currently is not in a good place. Rates are super high. Citizens is currently overcapacitated. Private markets are not as many as we would like. And it's just very expensive and very difficult to purchase insurance.
Right.
But things are looking
They're getting better.
good
Yeah.
and getting better. And hopefully in the next couple of years, we should have all these other private markets entering Florida and creating lower premiums for all.
But at the same time, we had a lot of private insurance companies leave the state at the same time in the last few years. Is that still happening or has that slowed down?
It has slowed down. The carriers are pretty consistent. They're here. They haven't necessarily left. Over the course of the couple of years ago, there was an issue with financials, and carriers just weren't able to cut it. And what happened is the state would put them into receivership. It wasn't viable for them to be operating. If God forbid something were to happen, they wouldn't be able to make their obligations. So remember I talked about the reform a few minutes ago. It's not just bringing in new carriers. It's also getting rid of, I think it's first party legal fees.
Yeah. So just a quick definition. What is that first party claim? What is that?
So basically, first party is essentially when, let's say you sue somebody.
Mm-hmm. Okay.
So if you sue somebody and the award by the judge is awarded, your insurance company has to pay for all the legal fees, even if it's $1. So let's say your award is $1, they still have to pay the legal fees of the other party, which can get super, super, super expensive. So they reformed that where if there were to be a lawsuit after a loss, the obligation, the amount of money that's paid for legal fees is controlled.
Okay.
And that's going to really help the industry with being profitable.
Got it.
With the insurance companies.
Yeah, I got, as you know, because you are my insurance broker agent, along with a few other people in my family as well, and other clients of mine. But as you know, I got put off of Citizens in the last year, and a new company came in and took my policy, which not weirdly, but what the good thing was, it was actually less money per year than what I was paying with Citizens. Not by a huge amount. Maybe I think it was like $200. But hey, $200 is $200, especially when it comes to insurance. There's people paying far more what I'm paying and what you're paying. But I guess whenever you can get a little bit of a savings, it does feel good. And it's also good to know that there are other companies going to come in and say, you know what, hey, we'll take this policy from Citizens. We will now be your insurance company for your home or for whatever else you own. And I think that's a good thing. Like you said, it's a good thing because it does take the stress off of Citizens.
I want to also piggyback off what you said. So in your particular case, the depopulation offered to you from the private carrier was less money. There is a rule, and this happens a lot with single family homes in South Florida, where the depopulation company can be up to 20% more expensive than the current Citizens policy. And this current statute states that the consumer has to go to the private market if it's within 20%. So if it's over 20% less expensive, then the consumer, the homeowner can make the decision if they want to stay with Citizens or go to the more expensive depopulation carrier.
That's good to know.
But in some cases, people are paying up to 20% more money and still getting kicked out of Citizens.
Got it. Okay. It just has to be within 20%.
20%.
If it's over that,
correct.
You can stay with Citizens. If it's not over that, you have to go to the new company.
You have to go.
Understood. I guess I got lucky, in that respect. But that's a good thing, and maybe that, like you said, if there's more companies that come in, there'll be more situations like myself where we end up paying, a consumer ends up paying a little bit less, and hopefully that does continue to happen where we get more people, more companies into the market here. So when I come to you, Adam Spiegel, or if I'm just off the street, how can you help me get insurance? What do I need in order to get homeowners insurance and have you do it for me or anyone else?
Okay. Well, usually when a prospect comes looking for an insurance quotation, we got to find out, is it a condo or is it a house? Because, different types of policies would be necessary. With that being said, if it's an older property, when I say by older, usually 15 years or older,
Okay.
would be the definition of older versus newer.
Right.
We would need certain inspections
And what are those?
performed.
You're right.
So when the consumer is working with a real estate broker like yourself, we would need to get a copy of these reports, but that would normally come after the customer signs a contract.
Right.
And they have to perform that home inspection within a certain amount of time. Usually the home inspector performs the 4-point inspection, which is one of the two reports that I would ask for.
Mm-hmm.
And the second report would be a windstorm mitigation report.
Right.
With those two inspections, I know my markets. I know what they'll accept because certain markets don't like older roofs. And today's definition of an older roof can be as young as 5 years old or 8 years old in some extreme cases.
Right.
But most part, some carriers are going to a 10-year roof, to a 12-year roof. But then again, it depends if it's a shingle roof versus a tile roof versus a flat roof. So there's a lot of variables involved. That's where the professional like myself would review the reports and understand the underwriting guidelines of the carrier.
Right.
Then we would go ahead and work with the client to put together a proposal, which would be emailed off to them. I personally work with them over the phone. Anybody that's ever worked with me knows that I don't just take some basic information and then fire off an email with a quote. I like to do it with the client on the phone.
Right.
Because there's just a lot more involved, and I want to pick certain things for them, or rather them be the decision maker if they want this or want that.
Give
or
them
don't want
choices.
this or want
Right.
that.
Right. You give them the choices. You say, here's this, here's a different deductibles, different plans, different rates, different amounts that are being
Correct.
insured.
Correct.
Yeah. And
So the rule of thumb right now is newer construction is key
Mhm.
to a reasonable insurance premium. Older construction, you can get there, but you have to have a lot of mitigating features on the home. And I can discuss that with you in another topic on this
Sure.
podcast if
Right.
you wish.
Yeah, yeah. And another thing I think is also, you said the wind mitigation report, and that's critical for what? To get credits or get discounts on one's insurance policy?
Yeah, the mitigation report is a report that basically the agent uses and he puts in when he's rating the quote, how many credits are going to be applied.
Right.
And the home inspector, so it's a uniform form across all insurance companies. It's not like every insurance company has their own specific form. This is a state form, and it's done exactly the same way for every carrier to apply the credits. So every home that this is applied to, you get certain credits or don't get certain credits. And again, I like to educate people saying, hey, you could have got this credit. You might want to look into hiring a contractor to spend a few dollars, and this is what it will save you if you, let's just say, spend $1,000 retrofitting something that needs to be fixed or retrofitted rather, and it might save you $1,000 a year. So the first year is a wash, and then every year subsequent after that is going to save you $1,000. That's a good thing.
Are there particular areas, locations that are more difficult to obtain insurance for? Like the coastal areas on the water or low-lying areas, are those more difficult? I would assume they're going to be more difficult to obtain, but are they?
So the NFIP, which stands for the National Flood Insurance Program, in the last, I don't remember exactly, maybe a couple of years, have reformed the program, the flood program. So now every single property is actuarially rated. So it's, before it was just by zones.
Right.
If you lived in an AE or an X zone, it would done that way. So now every house is individually rated. And yes, coastal properties, low-lying areas are getting very expensive for flood insurance. And there's something called the 50% rule with flood.
Okay.
So if your house is flooded out, or have a loss. It doesn't have to be a complete loss. It can be a partial loss. Every municipality has a different interpretation on how long this would go for. For instance, if you have a loss every year for 5 years, if you reach 50% of the market value of that property, then guess what? Then that property might not be able to be fixed by FEMA, by the National Flood Insurance Program. They might say, nope. Other municipalities might have a 2-year where if you reach 50% in 2 years, they will not repair the risk. And then flood insurance becomes an issue to obtain. So yes, a lot of people are steering away now from coastal communities and going more inland because of all these flood losses. They're concerned with the cost and the what ifs down the road.
Right. And there are private insurance marketplaces for flood outside of what FEMA offers, right? There are
That is
private
correct.
insurers?
Yeah. So aside from the NFIP, you have private insurance for flood.
Right.
And because of the, Debbie, Milton, Helene for 2024, these private carriers have also been taking some losses. So they're refining their rating. They're refining where they want to insure. I ran a few private flood quotes recently, and they were much more expensive than the already expensive national flood insurance program.
So when you put a policy together, for a homeowner, what types of policies are there? I mean, there's the hurricane, there's fire, there's windstorm. Can you explain those policies?
Yeah, absolutely, Matthew. So when you're a homeowner living in the house, owner occupied, you would be having the option to purchase an HO3 policy. It's homeowners owner occupied insurance program policy. So that policy is usual and customary. Lately, well, before I get to that, so if you're renting out the property to others,
right.
It would be a dwelling program, DP policy. Now they have a DP1, a DP3. The numbers are associated with what's going to be covered within the policy. A 1 would be much more limited than a 3. A 3 is kind of what you want to get if it's available. And unfortunately, some of these homes that had prior losses from water, broken pipes, or they have older cast iron or galvanized plumbing, the carrier might say, nope, we're not going to be willing to give a DP3. It's only going to be a DP1, which excludes water damage, and in some cases excludes theft coverage as well. So it is much more limited. But we are adapting, the carriers are adapting, and I've had some instances where if a buyer of a home was interested in purchasing and living there, primary, that the carrier would offer a dwelling fire policy, DP3, endorsed to owner occupied. So it's no longer specifically designed for the tenant living there. So it could be owner occupied written on the dwelling fire program, which is good because the rate could be a little bit lower, but yes, you have to accept that there are some limitations within that policy.
Yeah. So you're getting back to homeowners. You mentioned the HO3. Like if I have a buyer who's going to buy a new home, or someone's renewing their policy, let's just say, what policies or what kind of insurance would they need for their home purchase?
So the meat and the potatoes of the actual policy, we'll refer to a homeowner's 3 policy right now. We're going to use the term multi-peril in this case because you can buy a homeowner's policy excluding hurricane or windstorm.
Not advisable, people. But,
no, not necessarily. You can do that. There are reasons why you would do that.
Okay.
You could buy a homeowner's policy excluding the hurricane and wind portions because you might go back to Citizens, for instance, or another market and buy just the windstorm.
I see. You can buy that
combination.
Got it.
The combination of the wind and the homeowner's policy, the 2 separate policies, might be less expensive than buying the multi-peril option.
Okay. Got it.
So within the homeowner's policy, it's going to cover for a lot of cases water damage. So if you have a pipe that breaks,
right.
But a lot of these private carriers, buyer beware on the older homes, if they don't accept, a lot of these carriers don't accept galvanized or cast iron plumbing. So they exclude that. So it wouldn't be eligible for them. Some carriers say, okay, we'll do it, but there's going to be a water damage limitation built into the policy of $10,000.
Okay.
With that being said, if you have a water loss, a pipe that breaks, so you're at work, you come home and water is coming out the front door, and you have a $2,500 deductible, your recovery would be maxed out at $7,500. So it would be $10,000 minus your deductible, so $7,500, and that loss that just ensued could have been 6 figures. So just buyer beware.
Gotcha. As far as you offer. Was it in the policies? Actually, let's talk quickly about is it HO6? Is that the condo policies?
Correct.
And that's obviously condos are a huge portion of dwellings in South Florida, in Florida, and it's also a huge portion of what buyers are buying here. So explain what that insurance, because condos do require owners to have insurance, but let's talk about that policy.
Yeah. So basically with the condo policy, the big misconception usually is, oh, the association covers the insurance because I'm paying it in the maintenance every month.
Great point.
I use the word misconception because it is a misconception.
Mm-hmm.
They're covering common areas. So the building insurance that they buy for big dollars is going to cover the roof, the exterior shell of the building, and common areas within. You're responsible for what we call walls inward.
Mm-hmm. And
based upon the bylaws and of that particular association, you may or may not be responsible for the drywall, but the gist is that you're covering the floors, you're covering all the built-ins, the cabinets, the countertops, the showers, the toilets, anything that's permanently attached. Mm-hmm. And then the personal property would be a line item on that policy as well. Liability would be a line item, and then loss of use would be a line item. Loss of use meaning if there were to be a covered loss within the policy, mm-hmm. and you can't live in the condo unit or even the house, if it's a homeowner's policy, the carrier would pay up to the limit for additional cost of living, is another word for loss of use.
Right. So you have a place to live while the place is being repaired, or
correct,
so
without being overburdened.
You're not living on the street, essentially. That covers.
Correct. You're not being overburdened, paying a mortgage and paying for rent,
which can get very, very expensive.
Absolutely.
And, it's unfortunately if anyone ever has to go through that. But like you said, if you have that coverage in your policy, then take full use mm-hmm. of it. Make use of it because it will save you some money. Hopefully, you never have to experience. You never have to tap into it, but it's there for you. So, as an owner or a buyer, when I'm getting insurance, is there ways, maybe not this time around, to lower my rates or do things? What things can I do as an owner to improve my home or to help lower the cost of my insurance down the road?
All right. So we'll start with the first part that you mentioned, improving the home. Mm-hmm. This is more specific to older homes, built in maybe the 20s, 30s, 40s,
which
50s, 60s, all the way to the 70s and 80s. Putting a new roof on the house is the first step in potentially getting a reduction in your insurance premium. The roof may or may not already have a credit called Florida Building Code credit, FBC. Every municipality, like Miami-Dade, they changed the code. If I'm not mistaken, it was 1994. So if the roof was put on a certain date in 1994, I believe the date was September mm-hmm. Of 1994, but don't hold me to that specific date. It could be October, but let's just call it September for now.
Okay.
Then you already have that credit. So if that roof was put on, let's just say January 1st, 1995, that credit should already be applied to the policy. But putting a new roof on in 2025 is not going to attain you any additional credit. But underneath that roof cover, whether it's the tile or the shingle, it's roof-to-wall connections or roof-to-wall attachments.
Right.
And the older homes weren't built to the current code, and they can have either no credit or minimum credit. So there are companies out there that do roof retrofitting where they go into the attic or they go through the soffits and they apply a better credit than you currently have for a cost. And they will provide you, or you will get a new windstorm mitigation after showing that your house is now properly or better mitigated against a wind loss.
Right.
Before as you're getting the quote from this roof retrofitting company, you call up your insurance agent and say, hey, what do I have now? And then if I get this additional credit, let's say you go from toenails to clips, mm-hmm. what is the annual savings with the current carrier that I'm with? That agent should be able to give you an exact number annually and prorated what your savings would be, so you can make a educated decision if it's worth moving forward with this roof retrofitting.
Absolutely, yeah.
That's one thing.
Right.
The second part is you call up your insurance agent and you can go over optional coverages. Mm-hmm. One of the larger costs of an insurance policy is having replacement costs on personal property. Right. there is an option, and this is a personal decision. You can change that to depreciated value, also known as actual cash value. So after a loss, if your contents were to be damaged or ruined, the carrier on a replacement basis would basically replace that item at today's value. So a sofa might be $3,000. They'll pay you at $3,000 to replace that sofa.
Right.
When you change it to actual cash value or depreciated value, then that gets more complicated. The carriers have a depreciation list, how long a sofa might last. They might say, okay, 10 years. How long have you owned it? You say, okay, I've owned it for 5 years. Now it's depreciated by 50%. So that $3,000 sofa that, to replace it today, you only get $1,500, which is half its value. That's just one way of explaining depreciation.
Right.
Because
Interesting.
certain items like computers might have a 3-year life expectancy,
My TV.
and
Yeah.
your loss happens on the 4th year. Guess what? You don't get anything.
Yeah.
So-
well, I mean, and those things have also come so, inexpensive to what they used to be. As TVs, you can get yourself a brand new TV for $200. It makes sense what you're saying as far as going on depreciated value, because I guess there's a cost savings there on your type of policy that you would have at that point. Well, also, I remember you always mentioned something about like the electrical panels, things like that, changing them or upgrading them to a higher standard. Also, does that help?
It does not help on the premium. It's an eligibility. So when getting back to what I was saying earlier about the inspections, that's under the 4-point inspection.
Okay.
So under the 4-point inspection that's completed, the agent's going to look at the type of panel and then look at the carrier's guidelines to see if they'll accept it, because there are a handful of panels that have been recalled over the course of the years due to arcing and sparking and creating fires. So a lot of insurance companies say if you have the panel, you're not eligible for us.
Right. Yeah, actually,
So that's
I credit you for being one of the people that, for the person who educated me on that. And I've been doing this for a long time, and I think when we first started working together, when we first met, about 10 years ago now, and you mentioned one of the panels. I mean, I know the panel when I see it now, but I was like, really? And I didn't know. It was amazing. But then again, that goes to, I guess, having the right people that you're working with, where it be an insurance broker, a home inspector, mortgage broker, architect, whatever it is, people that I think help educate me as a real estate agent as well. So then when I go to a property to show it, or I'm at the inspection, I can point those things out to my buyer or even my seller before we go to market. Say, hey, that panel is going to be an issue down the road for us. We may need to get that replaced before we go to market. Or that water heater, hey, that water heater is 15 years old. You really need the insurance is not going to take this based on experience, or they may take it, but they're going to hit the buyer with a higher premium. And then say, look, if you change it, it'll be different. We can probably save you a few bucks. Worth to spend whatever it is, $900 or $1,000 to put a new water heater in as a seller, even, because it's one less hurdle to get over and one less issue that's going to come up. So yeah, I mean, there's things
even for you, Matthew, even for you as representing a buyer, you can help the buyer because of all the stuff that we've been through over the years with water heaters and electrical panels, by working it in where the seller changes it before the buyer buys the house.
And we've done that. Yeah.
Might not, the buyer might not realize what just happened, but by replacing the water heater to a newer water heater, and by replacing a panel that's only accepted by Citizens to a panel that's accepted by all carriers, the agent now would be shopping more carriers and presenting lower premiums, because now they can, by having a panel that's no longer one of those. Exactly. The agent's not necessarily going to tell the customer, oh, I quoted you with the company, but they can't, here is $2,000 less per year, but they won't take it because of the panel. They're just not going to quote that company from the start, knowing that it doesn't fit.
Right.
So that's a great point you make.
Also, because insurance is obviously is a component of the closing. We need, especially if they're getting the financing. If they're not getting financing, there are people out there who we don't recommend it to go without insurance unless they're the capability to self-insure, if they're one of those fortunate people out there. But especially when you're financing, the lender does take that component of what the cost of the insurance is into the overall picture of what the buyer is able to afford, and never is they ever correctly quote it
Correct.
on the
Yes.
the good faith estimate, or what do you want to call it. It's always somehow $500 for a year, and I'm like, how did that happen? But again, this is people, they just plug in a number and that's it. But this is something, again, I credit you, because when we first started working together, and I would go to an inspection, you told me, hey, get me the 4-point and wind mitigation report as soon as you have it within your inspection period. That way I can take it to the underwriters and see what the market is for this property. And that's a big savings in time, because, and I recommend this to a lot of other agents when I meet them, real estate agents, say, hey, you know what, my insurance broker told me, recommended that I do this during the inspection period, have the 4-point and wind mitigation report looked at in order to get a proper quote for insurance, so it doesn't come as a shock 2 days before closing, when it's like, oh my God, I waited till 2 days before closing to get my insurance. And now my insurance, I didn't know my insurance was going to be this much. Then the good and the bad is, at least you know what you're going into, and also for the lender at that point, because it doesn't throw out, like our good friend David Krebs will talk about mortgage lending, and talk about the debt to income ratios and things like that, and that can throw the whole deal out the window, because they were thinking of $500 a month, $500 a year for insurance, and now it's really $5,000 a year. So that goes into the payment of the buyer, and like, hey, you can't buy this now. So, getting that wind mitigation and getting the 4-point to you during my inspection period has been a big savings of time and money for my buyers during the last 10 years that we've been working together. And whenever I'm able to refer you the business, and that's something that helps a lot. I don't know why other real estate agents don't do that, because again, they're not maybe they don't have a relationship, with an insurance broker who knows what they're doing or makes good recommendations. So I credit you for that. Again, I've been doing this a long time, but I'm not too old to learn new things and how to do things better. So, and again, this is when I associate myself as a real estate agent with good service providers who actually look out, not just for me, but for my buyers and my clients. Mm-hmm. So that's critical. And like you said, it's like you listen.
Absolutely. One more thing I want to bring out that we haven't talked about is for eligibility. So if we find the needle in a haystack carrier that checks all the boxes, with the premium, prior claims, claims.
Great that you brought that up.
Claims follow the consumer. Mm-hmm. So if you have a property in New York that caught fire 2 years ago, that has to be disclosed on the application for the carrier that you're writing in Florida. And in many cases, they have a hard rule, no prior claims in the past 3 years or 5 years, regardless of location.
Right. I think one time we had a deal. I had the buyer and we were in a contract, and I referred the buyer to you, that the home itself had a claim or two against it. That was something I never really, I think it was the first time it ever popped up for me. So does that hold true, that if a home has had a claim for whatever, is a leak or something, and the previous owner made a claim for it, does that affect the insurance?
The question is, it follows the buyer, it also follows the home that they're buying. So some of the programs that the carriers use are able to search prior claims for that property, and then it will automatically pop up.
Right.
So yes, that can be a shock, especially if the buyer has not been advised that there has been a prior claim on that property. Right. And that could put a halt to the moving forward with that particular carrier. Yep.
No, that's good to know, because like you mentioned, it may follow the claims may follow the individual, but also now they may follow the house itself or the property itself. So that's good to know. That was actually, this was a case that happened with us. It's a while ago, but I don't know. And I remember, this is a credit to you, where the buyer said to me, because she had quoted, gone to other agents and quoted, got quotes. And I said, well, talk to Adam, see what maybe he's got the same policies or something else. And then she came back to me and says, I don't know if I'm saving any money by going with Adam, but I do know this. I know he's telling me the truth. So that's a credit, to you or to anyone else who does treat their business and their clients and their customers with such respect like that. And you even said to yourself, you may not get every deal, and you'll be honest about it and say, hey, there may be a better policy out there for you. I don't have it. And we've had that happen, you and I, where we had to go to another, insurance broker because they had a company that you didn't write for, and that's okay. But I just want to convey to people that are listening or watching this is that South Florida is a tough market. And it's a tough market in that you get the people who you're working with. You want the right person. You want the right people behind you, supporting you. Because most people, they don't know. And I think if I said, I admit I didn't know things until someone told me about it, or explained it to me. And oh, great, now I know. But, it's a tough place here. It's South Florida. And getting the right people, good people, is hard. And once you have those good people, I always tell them, look, insurance is something you have every year, like you said. Like my father-in-law, for instance, his insurance guy disappeared. Remember that? He just disappeared into thin air. And you mentioned that in the beginning of the episode, when we started, that you rely on the repeat business and the repeat renewals. And again, this is just showing, like, my father-in-law couldn't find a guy the insurance broker who did his insurance. God knows how long ago it was. It's like they just disappeared into thin air, and that happens a lot. But you want people who are here for the consumer, the customers, and the clients in the future, because you just need reliable people who know what they're talking about, really. So outside of insurance for homes, what else do you write policies for? Can you write for car insurance, for general liability, things like that? What else are you capable of providing insurance for?
So yeah, auto insurance, absolutely. People also purchase umbrella insurance policies, which is essentially excess liability over primary. So if you have a lot of assets and you want to make sure it stays with you, God forbid you get into a fender bender, you can find yourself with a lawsuit, and it might exceed the limits that you have on your bodily injury on your auto policy. So people would buy an umbrella policy to cover above and beyond the limits on your homeowners insurance policy, above and beyond the limits on your watercraft, above and beyond the limits of your vacant land, for instance, your investment properties. So an umbrella policy is something that we do sell as well. Some people would prefer not to buy any property insurance because of the cost, and rightfully they can make that decision if they don't have a mortgage.
Right.
So they can buy liability only. That's an option for them. Also, flood insurance, if you have a boat, watercraft insurance, jewelry insurance. So if you have a jewelry and you want to get a rider or specifically buy a policy for it, we can do that as well. Right.
What about airplanes?
Airplanes is a niche market. Our agency would probably be able to accommodate that. We would go to a specialist. It's something that I just haven't personally done. Yes, but yes.
No, that's good to know, because look, we live in an area where we have very wealthy people moving here or living here now, and private jets and the private jet industry is a very big business down here now.
Oh, absolutely. There's some neighborhoods in Wellington that live right on the airstrip.
Right. Or in Ocala, up in Ocala, where you can, if you're John Travolta, you can land your 747, which is pretty darn cool. Also, let's just say, I know there's something also, as far as you're also able to do classic cars. That's because obviously we're talking about, real estate, but also, there's something obviously you've always been interested in. I know personally with you and I that you're interested in the classic cars, and you're able to write those type of policies also for people.
Yeah. I'm a big car nut. So I don't just write them to write them. I write them with pure passion because I just love it.
Right.
So we can have a great conversation about cars if anyone's listening that just wants to get a quote.
Absolutely. That's why I brought it up because, there's people here with some very exotic cars, very expensive cars,
Mhm.
classic cars. There's a pretty decent scene down here, I would say now in South
There
Florida
is
about,
a wonderful scene.
yeah.
It's getting difficult.
Yeah.
A lot of these newer luxury SUVs, these Bentleys and Rolls
Mhm.
Royce and Lamborghinis all have a segment for SUVs, and unfortunately, that has been a challenge lately.
Oh yeah. Well, I would imagine that, there's probably been some big hits in the last year, especially on the west coast of Florida with some of these, high-end supercars or exotic cars
Not
or
even
luxury
necessarily, yeah,
cars.
not even necessarily from the storms.
Yeah.
If you have, I'll just give you an analogy rather.
Hmm.
If you have an Aventador, a Lamborghini Aventador, which is between a 300 and a 700, $800,000
Hmm.
supercar, that car probably lives in the garage. Might come out on a Saturday or a Sunday or go for
If
a
that.
nice, out for a nice meal
Right.
with it. But it's not an everyday driver. It's rather uncomfortable, a little obnoxious, but it's not something you drive every day. The Bentleys and the Rolls Royces, SUVs, the Lamborghini Urus SUV is a vehicle that you can hop in, drop the kids off at school, go get a coffee, go to the
Publix.
office. It's Publix and drive it as an everyday driver.
Right.
So a lot of people are buying these cars saying, hey, they're for limited use, but they are driving them more often. So
Right.
the exposure is a lot greater, and that's where the losses are happening.
Interesting.
So I can't tell you the exact percentage, but I heard near 500% loss ratio on those
Right.
cars.
Right. So if I got a 1988 IROC sitting in my garage, I need insurance, I can call you for that, right?
You can call me for that IROC. You just have to grow a mullet.
Well, it's gonna be a little. The hair's gotten a little thin on top, so it's gonna be a little tougher. But I can always get one of the wigs and relive my youth again with one of those. But anyway, so let's just wrapping up. How does someone get in touch with you? What's a good phone number? What's a good email or LinkedIn that you have, or some other social media that someone can find you?
I'm gonna give my cell phone number. It's 954-695-2939. And then my email address is sofloins@gmail.com. That's SOFLOINS@gmail.com.
Great. Yeah. So everyone if you've tuned in and you're down in South Florida or in Florida, because you can write everywhere in the state for that matter, get in touch with Adam Spiegel. You do yourself a service. Even if you have a policy and your policy is about to come up, you can review that policy for them and say, hey, look, I can do better, or there's a better policy, or maybe, no, what you have is great. Stick with it. So you can pick up new business this way as well, by reviewing current policies for people when they're coming up, and maybe you have a better program for them, or you can find a way to, hey, you know what, I can save you money here or there, which is nowadays is tough to do to save money, but if someone can save a couple of bucks, that's one way of gaining clients and gaining the trust of people down the road. So just any final thoughts, any final words for when we wrap up?
Yeah, I do have one. I want to tell you a quick success story that I had. So
Right.
I had a customer not too long ago call me. The Homeowners is getting expensive. It's just an older home, not a heck of a lot of wind mitigation features. It is what it is.
Right.
Type of thing. It's with Citizens. It's not going anywhere. It's staying there. And I said, let's talk about your auto. And I ended up, he goes, well, it doesn't come up for 2 months, just under 2 months. I said, this is the best time to quote your auto.
Sure.
So what I did was I did a quote effective the date that it expires, which was like just under 2 months out, and it yielded me a certain price.
Okay.
And he goes, oh, that's going to save me a significant amount of money. Then he goes, well, what if I buy it today? So what I did was I changed the effective date of that auto quote from just under 2 months out to today's date, and it went up significantly because they gave an advanced shopper's discount for buying it today, effective for a month and a half, for instance, out.
That's interesting.
So he goes, done. I'll buy it today. Here's the credit card for that policy. We'll start it in a month and a half, and the policy is going to save him a significant amount of money. He's going to take that savings and apply it towards his homeowner's premium.
So that's a recommendation if you're going to start shopping your
So
insurance.
yes,
Do it a
advanced
few months ahead in
auto
advance.
shopping is not in all cases, not every carrier does it. But in this particular case with the carrier we used, it worked out quite well.
Great. That's awesome. Yeah. I got a couple of months. I got a couple of months left on my policy. I got till I think April. So now I have to keep that in mind. I appreciate that. That's a good point. All right. Well, Adam, thank you for joining me on the Krinzman Property Playbook. I hope everyone who is watching or listening to this podcast on real estate in South Florida, and also for your classic cars or your supercars, think of Adam. Learned something important and got some useful information out of this, and hopefully we can maybe down the road have another conversation in the next year from now, talking about how where we are as insurance in the state of Florida, and give an update at that point. All right, Adam, thank you for being on with me today. I really appreciate it. And all right, that wraps it up today. That's it for today's episode of the Krinzman Property Playbook. I hope you've gained some valuable insights and feel inspired to take your next steps in the real estate game. If you're ready to make a move or need expert guidance, let's connect. Whether you're buying, selling, or looking to invest, I'm here to help you navigate the South Florida market with confidence. You can reach out to me directly through my website or on social media. Let's get the conversation started and make your real estate goals a reality. Thanks for tuning in, and I'll see you next time on the Krinzman Property Playbook.